I just wanted to jump on and make a short video to some news that I've been reading over the last couple days about some analyst predictions on Disney and the future of ESPN in 2023. I do own shares of Disney, so it's been particularly interesting for me to follow along. And I just wanted to kind of give my reaction and kind of go through what the prediction states and why they think that they should do that. So yeah, this should be a quick one, but interesting. So Wells Fargo and a couple other um, companies that are following the stock think that with Bob Chapek going out, Iger coming in, that he's looking to do a big splash, really change the direction of the company once again. And it looks like all eyes are looking at him to potentially shop around ESPN next year. I think it's a couple reasons why uh, investors are looking at this as a potential option. A couple activist investors has cited the value of ESPN and how it doesn't really have a place in the future of the company. The fact that they can probably fetch 40 plus $billion for it, and the market cap of the company is currently around 150 billion. So it's a big chunk of the company, for it not really being a relevant part of the future and where the investment's going. Um, my opinion on this is ESPN is a huge cash cow for Disney currently. It really fuels their linear TV business, and it's actually the most productive unit of the business in terms of a return on investment and how capital light it is versus the profit that they derive from it. So I actually think ESPN is a really important part of the business. So let's just say they did go forward, look to sell it. Um, During 2020, 2021, where valuations were a bit higher, lots of um, investment reports were saying they can get up to 50 billion. Since then, as I look at more recent reports, um, I think the consensus is probably closer to 40 billion. That would obviously help their business. Just looking at their balance sheet right now, which is not in a great spot, they have about $50 billion in what would be long term debt. So that would really help them kind of offload some of that long term debt that they got during COVID, maybe accelerate some investments and efficiencies that they can realize on their streaming business and other content businesses. But overall, why I'm worried about this is if we go up here and look at their earnings from fiscal year 2020, bear with me. Once I get there, here it is. You'll see that especially in their media and entertainment division, direct to consumer is still losing over $4 billion a year. I think they're expecting that to peak sometime in 2023 and then be break even to slightly profitable in 24 and onwards. So it's still a couple years where we're going to be bleeding a lot of capital, a lot of money out of D2C. And ESPN's really what's holding the linear networks together. Last year they grew 1%. Without ESPN, uh, this number will drop significantly and really accelerate cord cutting. So I think for the time being, with the focus being on building out the streaming business, direct to consumer, and getting that to scale with pricing and figuring out how that business works a bit more and how we can get the economics to be profitable, it's not the best time to be offloading a huge cash cow on the business that frankly is helping the business fund those endeavors. So, personal opinion is that's probably, while it may have a positive impact short term on the stock, since lots of value is being realized on a pretty depleted market cap, I don't think that's in the best interest for the long term for the company. If they were to offload, ESPN. I think that probably 2025, once we have the direct to consumer segment of the business not bleeding money anymore and hopefully increasingly profitable, then that may be a better time to divest ESPN from a position of strength to get the debt back in line with where it should be, um, and use that money to kind of fuel the next wave of growth. But I just think selling ESPN at this point is not really um, acting from a position of growth or a position of strength rather, and it's not the best time to be getting rid of a huge cash cow on the business. So that's my 2 cents. Would be interested to hear any other um, people who follow Disney or just interested in this, what your opinions are on the matter. Just for full disclosure, I'm not a financial advisor and I do own Disney shares.